Well, a survey by finance and accounting recruitment firm Robert Half has revealed almost half of the 300 directors and financial executives surveyed expect salaries for existing employees to rise this year. With the details, Robert Half director Kevin Jarvis joins me now live from our Sydney CBD studio. And Kevin, a very good afternoon to you and a warm welcome. Tell us how the survey was conducted and what the findings reveal.
So the survey was conducted in the first quarter of 2012. We did an independent survey of 300 CFOs and finance directors across New South Wales, Victoria, Queensland and WA. And as you mentioned, 48% of the respondents expected that salaries of the people within their teams would increase this year, and that of those that expected an increase, 34% expected that the increase would be between 3 to 4%. And 25% expected the increase to be between 5 and 7%. So it's fairly significant growth and promise for accountants in the sector. I guess we expect these days that most of that growth will come from the natural resource rich states, which is kind of the reflection that we saw in the data. There's bigger growth in those states than there are elsewhere in the market.
That was the point I was going to make next. How does the two-speed economy play into your findings? Did indeed the survey show a higher pay rise potential in the mining sector linked jobs and regions at all? And you've pretty much answered that, so there's no surprise. Just to give me a little bit more detail on that particular area of the survey.
Yeah, sure. So we didn't look at specific data for each state, but what we see in the market is a reflection of the sentiment that we got back from the CFOs that we surveyed, and that is that there's a lot of drive of growth, economic expansion and growth of finance and accounting teams in those states. So as a result, salaries naturally, due to high demand, have been increasing at a faster rate than they have been in the likes of Victoria, although Victoria seems to be rebounding fairly well at the moment, and New South Wales is probably behind Victoria in terms of growth. But you know, despite that, there still seems to be good positivity. Of the 300, nearly a third were in the financial services sector, so you'd expect that a lot of those were Sydney-based, and so therefore there's still a positive outlook from those CFOs and finance directors, even in that sector, suggesting you know, potential for growth in salaries for accountants in New South Wales as well as the other states.
Annual pay rises are usually in line with CPI. Given last week's data showed a softer than expected inflation level, do you think employees will use that to perhaps justify a potential decrease to the expected 3 to 4% remuneration hike at all?
I'm expecting that employees will be looking to get somewhere close to what the survey suggested they might. And that is on average 3 to 4%. We expect that there's probably, you know, in WA, etc., a lot more growth potential than that. CPI is obviously down, but the survey results suggest that accountants will do better than CPI this year due to fairly robust demand and a promising level of confidence in the economy. And in the survey that we conducted, 82% of the CFOs expected their growth prospects for their business to be positive this year, and another 77% expected the growth prospects for the economy in Australia to also be positive.
And just very quickly, why should employers rather continue to think about long-term retention strategies beyond just the dollar figure?
Yes, exactly. The financial incentive of a salary increase to an employee is really a short-term gain. Employers should be thinking about the longer-term gains that they can get in terms of retention by focusing on clear communication with their employees through formal reviews once or twice a year at least, and that those formal reviews should focus on career development, professional development, opportunities for improvement in flexible hours and annual leave, etc., as well as trying to create a culture and an office environment where people want to be. So there's a lot of other factors that employers can focus on that will help them to long-term retain these people, rather than just focusing on a short-term fix of you know, more money, which at the end of the day we don't all have deep pockets to be handing out big salary increases.
Indeed. Kevin Jarvis, Robert Half director, thanks so much. It was a pleasure.
Thank you.